This is Justin Pulitzer. This is a video supplemental for crude as of December 14th, 2014. And as we all know, crude has been in a bit of a crash mode of late. You can see it's coming down very severely, very steeply, and in big points gobs. It's getting the markets a little bit roiled. But one thing I wanted to point out is there is a very well-defined trend line since the bottom in the late 90s that has held even during the financial crisis and is possibly coming into play soon. Before we get there, though, you can see that crude oil had bottomed on a 20-month moving average in the 08 and 09 financial crisis with a little bit of an overshoot to the trend line, and then rallied back up. So I'm seeing that it's possible that we might bottom here with this slight bit of an overshoot here, considering how we've gotten there in this really steep fashion, that it's getting oversold, that we might be due for some type of a bounce and maybe a retest of the breakdown area somewhere in the low 70s. But if this area does not hold between the 60 and 57-ish, I can see in the Sunday futures we're trading a little bit below there. This 50, we're in mid 56s. It is possible that we do come down and retest this primary trend in the 45 area level. So this is going to be on my radar for a major write or write out type of a buy, either directly in the futures or with names like the XLE or the OIH, or we might even look at some of the ETFs, the USO or the BNO. I will be testing. I will be posting some of those trades on the stream once we get there, if we get there. But I do think it's possible to start doing some nibbling somewhere between where we are here and this area in those stocks. Some of them have some pretty large dividends. I'd be very careful with the more speculative names, the ones that rely on the price of crude being high for their business models to be sustainable. But some of the larger integrateds like the Exxons, the Chevrons, the Totals, the BPs, these companies sport rather large dividends, and they're probably going to be more sustainable than not. So that is kind of what I'm looking at. Anyhow, that's crude. One thing I will give you as a little bit of a supplemental is copper. This is also a bit of a backdrop and not one I've really heard too many people talk about. I'm sorry this keeps coming up. It's a glitch in the software and it just won't go away. But let's ignore it for the moment. You can see we've been coming down in a wedge pattern. And this low here was a really key low, this 2994, and we broke it, and now we're kind of in the process of retesting it. So anything below here to me shows that copper is a little bit vulnerable, and you can see that in the price action in stocks like Freeport-McMoRan, which have absolutely been getting slammed. That also, by the way, has a dividend now that's up around 5%. Just as a point of interest, that stock didn't bottom until they cut the dividend during the financial crisis. So that may be maybe something that traders are waiting for and keying off of. But I do see a little bit of support coming in somewhere around that. You can see we're testing into a lower volume distribution, and that's probably because of the bounce. We may even rally back up to retest this downtrend line. But the 61.8 fib is going to be really important, down $2.55, which is a pretty big distance from where we are here. So these reference lows and this area to me is going to be really key for copper and probably for the broader tape. Anyhow, thanks for watching, and let's have a good week trading. If you like this video, please hit the like. Be sure to follow me at Justin Pulitzer is my handle on Twitter. Thanks. Have a good week. Cheers.